My name's Darwin German. I'm here with one of our newest investors, Ben Garland.
I'm Ben Garland, just finished an 11-year career in the NFL, and I'm passionate about investing, so I'm really excited to be here today with Darwin. Darwin, I just had some questions to ask. I mean, as a new investor, it's a scary time out there. There's fears of recession, and I looked at my stocks today and they went down. Is this a time I should be pulling back right now?
I think that you should pull back in certain areas. Markets go up and down. I use an analogy of it's like a yo-yo on an escalator. So it's going to go up and down, up and down, and up and down. The real estate we buy, it's not tied to the stock market. So you're not looking at the stock market going up and down. You're in a solid long-term investment in real estate. And not only that, when markets go down, that's when people get scared and they want to pull back. And it's human nature to say, uh-oh, everything's going bad. I'm gonna pull my chips off the table and hold them. Well, no, now the things are on sale. You buy when isn't that the traditional thing? Buy low, sell high? Well, now they're on sale. So you can actually get a lower price than it would have been a year ago. Now, is that market adjusted? Probably, but still there's an inherent value that you buy after the dip, but you'd be very selective about what you're buying.
So it sounds like it's a great opportunity to buy right now. So why would I choose you to buy with? Do you have experience in these markets from the past?
That's one of the nice things about investing with me on what we're doing. In the last 10, 12 years, everybody's been a hero. Everybody rode the wave up. There were no mistakes made, virtually no mistakes. And we kept our same strategy through all of those good times, so that times right now we were prepared for. We know how to ride this through. Where the last 12 years, every real estate investor was a hero, but they haven't seen the down markets. You have to have a long track record to go back to 2000, the crash in 2008, or 2001, or 1991.
With a tough economy, how do you know where to buy your next property?
That's where analysis comes in. We focus on Dallas-Fort Worth. We know it's a great market. We've been investing here for 30 years. We know all the players, and so we get access to a lot of good deals. We get off-market deals, we get first looks, last looks, et cetera, because of our relationship and our reputation in the market. That one's really important, that we can get awarded more deals than most other people because they know we perform. We get to see deals first, and off-market deals, things like that, because of our reputation, because of our experience, but then we still go through and have to refine and look at every little detail. Is it in the path of progress? What is the demographic? What is the age of the property? What is the condition? How much money are we going to have to put into it? That piece of real estate is a business, and we write the business plan for what we're going to be able to do to make that more profitable and increase the value and create more value for our partners.
Sounds like with your relationships, you've got a real competitive advantage in this market. Is this a good market for the future? Do you see Dallas growing? Are there jobs coming here? What do you look at as indicators to know where is the next great place to buy?
We've been very fortunate to be in Dallas-Fort Worth and starting here. I'm just thankful we weren't in some other markets. I grew up in Southern California, and real estate there just didn't make any sense. And that's why we moved out here and actually started buying out here, is because properties made sense here. They've always made sense here. We've got a very pro-business climate. That's why Fortune 500 companies move here, and there's so many people moving out of California, out of New York, and coming to Texas and Florida and Tennessee. Zero income tax, and very pro-business, which makes it easy to operate. And really the predictability is the big key driver. Right now the market's unpredictable. People don't know what's going to happen, and with that unpredictability becomes instability. And that's when everybody's saying, we don't know what's going to happen, so we don't know where we want to put our money. I do know that it's always best to put it in real estate, no matter when you invest. Right now is a great time because the property values are down from that bursting of that bubble. And so now's the time to buy, and you buy here and you're very selective of what you buy.
What advice would you give to someone who wants to invest right now? What are you really looking for as an investor?
Everybody has different needs. You're young, you're still in a growth mode. You will look at things differently than somebody who's 60 years old. We've got a lot of investors, they're young. It's, hey, I want to create more wealth. I need to use my money and grow my money. Somebody that's older and retired, they want cash flow. So there are two different avenues that people look at for those investments, which is why we give different alternatives. So you can actually invest more for cash flow or more for upside. You can tailor it to what you want to do. That's investing on your terms.
So it sounds like I can make there's a lot of advantages to real estate investing with this. What would you say are the investment strategies that you go for? Are you going for cash flow? Are you going for appreciation, equity? What are you looking for?
Well, the big reason you don't invest on either coast is there's no cash flow. So if there's any hiccup in the market, you don't have any cash flow to fall back on. And so you definitely want cash flow. And of course, people want those returns. They want to see a check coming in that we pay out monthly, which is nice. But our strategy, the ultimate strategy, is value add properties. And what we do there, and we've been very successful, is we buy a property knowing how we're going to increase the value of that property. So we'll take investors' capital, buy that property, increase the value of it, and then we'll refinance and pull that cash out and give it back to the investor. They still have the ownership in the property, they still have the cash flow, but they got a lot of their initial investment back tax-free so that they can go reinvest to the next deal.
That's awesome. So it sounds like even during these tough times, you're making the community better by building up these properties and really adding value. Where do you think your next property is going to be?
Well, our next purchase we're doing is a property called The Mark, and it's in Weatherford, Texas. It was built by this developer that holds long-term. It is an incredible property. There's stuff on that property that I've never seen on any other properties before. I'm really, really impressed with this property. It's gorgeous. And that property, last January, right before interest rates started going up, they were offered $317,000 per unit for that property. They said, no, we're not going to sell it. We're long-term holders. But then the interest rates went up, and I don't know if they have an adjustable rate loan or what, or if they have their other projects that need cash. They decided to sell a couple of them, and this is one of them they decided to sell, and they were realistic. They were realistic about selling, so they actually priced it to the market. And we've got it under contract at $215,000 a unit. So it's 30% off right now from what it was a little over a year ago. We are paying $6 million under the appraisal, where the appraisal came in. So when we're buying that, you make money when you buy real estate. So we're buying that property and we already have $6 million in equity built in day one.
That's a huge discount. I mean, anytime you hear a deal like that, that's unbelievable. Do you think more deals like that are going to continue to come up on the market in the coming months?
Oh, absolutely. There's going to be blood in the water. The big problem is the interest rates going up so fast. We know that interest rates go up and down. We know values go up and down. So we plan long term. When we analyze a property, we put a 5-year exit on that. But we know we could be out in 2 or 3 years or 7 or 8 years. And right now it's, hey, you've got to be able to go through this down market. So our portfolio is perfectly situated for that so that we don't have these adjustable rate mortgages. We don't have all the problems that a lot of other people have. Over the last 10 years, that was me preparing for this problem with interest rates going up. Now, over the last 10 years, I haven't looked that smart because the interest rates kept going down. But I'm like, I'm holding fast to our investment strategy. This is the right strategy. So many people pivoted and went to the variable rate loans. And when they did that, they put themselves in a position that now they are absolutely getting smashed because their mortgage payments have doubled. They've got interest rate caps that they've got to pay for. There's cash calls going on. Do you know what a cash call is?
No.
Okay. Cash call is, hey, you invest $100,000 in the deal. Well, we've got a problem. We need more money right now. And so if you want to maintain your ownership level, we need more money. You've got to give $25,000 back to maintain your same ownership level. So the sponsors didn't prepare properly for whatever cash they needed because they'd never seen a down market. And so they come back and say, oh, you have to give us more money. And in one particular instance, I know another sponsor that it is literally that. People that invest $100,000, they've got to give $25,000 more to maintain their same level or they're diluted. And all that is to pay for an interest rate cap. It's like an interest rate insurance plan. So that's a sunk cost. You don't get that back. You're buying an insurance policy that'll expire and it costs you an extra 25%. So now you have to actually make that up over the long term Otherwise, a lot of them are going to say, we're throwing good money after bad. No, just sell the property, take the loss, and move on.
I just want to say thank you for your time. I feel way better about investing during these times because of your experience, the fact that you've been through this before, and it just seems like this is a great time to buy, great opportunities, and especially with that new deal you have. I mean, that's an unbelievable deal, and it sounds like more coming up, so thanks so much.
No problem. Thank you.